Hey everyone, welcome back to the channel. Today is September the 20th and it is Tuesday morning, and I want to talk about supply and demand, the reason why I traded, and probably the reason why a lot of people actually transition over from maybe stopping or quitting a job into trading full time. Okay, for me, the reason why supply and demand is so important when it comes to and it's part of my trading plan is simply because I can identify areas in the market where the big players at hand, the powers that be, the institutions, the market makers, the banks, where they are placing the orders, okay, where they are moving price from certain areas, breaking through structure, and you can see, the big positions, the big trades that are taking place. So just basically, it's very simple to identify those areas if you really know how to read price action and understand market structure. I keep emphasizing market structure, because you have to be able to read what's going on the chart, pretty much what the institutions, the banks are doing. Okay, it's a, I don't want to say game, but it's a business that goes on to fake traders out, and you have to be able to understand market structure and be able to look for those moves in the market where there are big, I call them thrust or big power moves in the market where the institutions or the banks are moving from certain areas and breaking through structure. Okay, it takes a lot of orders, it takes a lot of transactions, a lot of orders to take place at certain areas in the market, whatever the case is, to break through heavily congested or populated areas or there's big levels that sit at. So the banks and the institutions, they're the ones that have the money to be able to push the market and drive the market through a brick wall. Okay, so you have to understand that. So the reason why I primarily trade supply and demand, and I think a lot of people, and what brought me from over from the corporate world, say for instance, or even if you work in the private sector, into the world of trading, was more so because of the fact is I started to understand simply supply and demand and how powerful it was, and I saw the opportunity to where I could make money. Okay, so if you're sitting at ground zero right now and you're trying to learn actually how to trade and don't quite have a strategy how to trade, take a look at supply and demand. Learn it, okay, because it is, to me, it is the I'm gonna say holy grail, but it is the pot at the end of the rainbow, that gold sitting on the other end of the rainbow that will really open the door for you when it comes to trading if you simply follow the big power moves in the market. All right, so I'm going to show you some examples of what I'm talking about here so that you get an understanding of both, when we see areas in the market where there are big moves, say for instance, there's big swings that take place, the breaking through structure, whatever the case is. And we can also answer the question about something else that people ask is about low probability and high probability. So I'll answer that as well, because you have to look for and understand what high probability and what low probability is when it comes to trading. Because the question at hand I get a lot is if price retraces or pull backs to a certain level, and let's say it pulls back to a demand or a supply zone, it taps into it, moves away from it, and then revisits that area. Is it still considered supply and demand? Yes, it is. Okay, it's just at that point that it may not be high probability, okay, in the area of supply or demand. Okay, so let's go ahead and jump over and take a look at the charts. I want to show you a few examples, and even in some areas today that we can take a look at if price gets back to certain zones. Okay, so yesterday evening, say for instance, I'm going to show you on the 12 range chart an area of demand. Okay, all right. So you see price pushing up here, basically thrusting to the upside, making higher highs and higher lows. Okay. Now if you look to your left-hand side of your chart here, I'm gonna blow this up so you can see it. This is a major swing right here. It's a major area of structure. So you can say if price breaks this area, okay, with a big push to the upside, all right, we go back over to the left-hand side of the chart, and we'll mark this area. I'll mark it with, actually that box, that rectangular area is marking that area. So if we go back to the left-hand side of our chart, yesterday even at the close of the market, pushing up, into the opening of the overnight session as well. So this is the close of the market right here, and then the overnight or Globex session opens right here. Now we got a big push to the upside here, a swing up, a pullback, and then boom, the market breaks higher. breaks above this box right here, okay, which is that area of resistance that I just showed you to the left-hand side of the chart. Okay, you always must look to the left-hand side of your chart to see if price is breaking structure. That's one of the number one things. Step one to what you want to basically identify is price breaking through an area of structure, whether it's moving to the downside or moving to the upside, to help you identify an area of supply and demand. So we just saw where price broke structure to the left-hand side of the chart, correct? All right, out of this swing here, decent size swing to the upside. But what you see going on here is a lot of aggressive buying to the upside. Green candles, green candles, green candles. It breaks structure right here. And the thing about it is once price forms a swing like this with a lot of buying power to the upside, okay, and I look to the left-hand side of my chart and price broke that area of structure, it left behind and hasn't tested this area of demand yet, okay? It's what I classify as an untested area of demand, okay? Now, who is making the moves like this? The market, who's making the moves like this? In most instances, when you see big moves in the market, say for instance, whether it's a big thrust to the upside, a big push to the upside, major swing with lots of green candles pushing to the upside, and then you look to see prices being structure being broken, it's the institutions, it's the banks. Same thing when prices are moving to the downside, pushing hard to the downside, big power moves to the downside, and we'll take a look at some of those too. Breaking through areas of structure to the downside as prices moving down, it's the banks and the institutions. They're the ones that have the big money to be able to break through big barriers, big areas of support and resistance, or in this case, say for instance, support if it's moving to the downside. And basically all that's doing is setting up an area of supply back to the top end where the price started moving and making that big push to the downside, okay? So this is classified as an area of demand right here because for one, price broke through an area of structure and there was a big power moving to the upside here. We got a lot of buying moving to the upside. Now, to me, okay, this is untested yet because this price broke higher and took out resistance right here, okay? But it also took out structure to the left-hand side of the chart right here, okay? So all I'm doing at that point then is marking my area of demand on my 12 range chart. Back to this area here. And this is the trade that I took into the overnight session, okay? And I'm showing you guys this because, anyone that is in the position or taking that path now to actually thinking about jumping over to day trading, this is a solid strategy that you can use, and it's highly profitable, and you can definitely bank on it and make money because what are you doing? You're moving like the institutions, and I keep saying this, you're moving like the banks, okay? And you do not want to play and be in competition with them. You want to think like them. You want to move with them because that's how you're going to be successful and make a living from day trading if, whenever at time comes for you to be able to, okay, I'm ready to, move over from the job I had to now become my own boss and start to trade for myself, okay? Or start to make money for myself and do it from whatever environment you choose to do it from, okay? So this was the move I took yesterday evening. Again, I have to see a break of structure, okay? It must be a break of structure, and it must be a big move to the upside where I see a lot of, say, buying power or selling power coming out of a swing, okay? And then I mark my demand zone or supply zone. In this case, it's demand. Price comes back to that area. All I'm looking for at this point after price comes back to the demand zone is basically a break of a candle back to the upside. And then what I'm looking for at that point, once I see the break of candle, which is this green candle right here, taking out this red candle, the body of this red candle, it breaks above. I'm long, okay? Where do I want to take my long to? I want to take my long, and what I'm looking for at this point, once I'm into the trade, is taking it possibly to an area of liquidity, okay? An area where there's money resting in the market, and most times, and all times, it's either at equal highs, equal lows, a major high or a major low. In this point here, right here, the tops, okay? And what do you see happen? You get into the trade right here at 39.22, take it back up to the highs, which is liquidity resting right here at the high, okay? That's simply how you do it. Easy strategy to use. It's just simply being able to, one, I always tell you guys, understand market structure, know how to read price action, and look for those major areas or major shifts, powerful shifts in the market where price is breaking through areas of structure with a lot of force, and you're going to find those demand and those supply zones, all right? Now, here's another area I want to show you because this happened pre-session around 3 something this morning. So price moves higher, moves higher, moves higher, and what happens up here, okay? All right, price pushed up here, pulled back, broke higher right here. So we got a major high here, okay? Before the market pivoted and started pushing to the downside, doing what? Making lower lows and lower highs. So Price hasn't come back to this area here, but being we got a lot of power coming out of this area here, a lot of selling, a lot of aggressive selling, it happened early part of this morning. This was during the London session. So there's sessions that go on outside, or time frames of what you can actually trade outside of just the U.S. session. You have the Asian session and the London sessions. There's a lot of decent volume that comes out of the London session, but it's just depending on where you're at globally. For me, Eastern time here in the U.S., it's a little harder for me to trade at that time in the morning to get myself up. But maybe you're somewhere, I don't know, maybe out west, and that maybe be around about 12 o'clock your time, out towards California somewhere, or some other part of the world. If you're probably in London or in a European country, it would be a perfect time for you to actually trade. But what we see here is a big push to the downside. Okay, so what did price do when it pushed to the downside? It broke structure. Okay, it took out a lot of structure on the way to the downside. This would be a major area of supply resting back up in here. Price price returns back to this area right here, we can see a significant move back down to the downside. Okay, so it's just a matter of time if price approaches that, and it could possibly do that. I mean, this here will be the pre-session high for today once the market opens up. So we'll see, because we're only a few moments away from the market opening. The U.S. session opening up here at 5 minutes. It opens up 9:30 Eastern time. So, but let's take a look at another one. Okay, let's take a look at another area where there's significant buying or significant selling in the market, and there's opportunities as a trader to get into the market and make some money. Okay, so if we take a look at here at the 12 range chart once again, we're going to see here. Let's see here. Trying to mark an area here. Give me a second, guys. All right, so right here we see a big push to the upside. Price pulls back, okay, and then it breaks higher. Big move to the upside. A lot of buying coming out of this area here. A lot of buying coming out of this area. All right. Price has to break above this purple line here. This is resistance right here, okay? Price been a low here. There's a high sitting up here, okay? And price is making higher highs and higher lows to the upside. When it was making this big move to the upside, it's run to the upside. It made a high here. It pulls back. Boom, it breaks higher. A lot of buying coming out of this area here. Now, within this leg right here, we have what I classify or call supporting areas of support, in a sense, or supporting swings, okay? Out of this bigger swing right here. So, if you take a look here, let's see, price pushed up, made these higher highs and higher lows, made a high here, pulls back, makes a higher high here, pulls back a little bit, got a little zipper or swing right here, and then it breaks higher. Now, here's the area right here. If you can, you have to really be able to see these areas. Let's get an arrow line right here. Push to the upside, pull back, price pushes up. Just say it pushes up right here, okay? And it finally breaks through this purple line right here, okay? So as price pushed up here, made this higher low and made this higher high here, it broke resistance here, but it took out structure over here, okay? And that's what we're looking for, breaking structure. Now, the thing, once price breaks structure and we see it take out, resistance, what are we looking for then? At that point there, we're saying, okay, was there a big push to the upside with a lot of power, where there was a lot of, say, for instance, say green candles, okay? Anytime you see green with a lot of green candles coming out of a swing, you can classify that and say, okay, that's a big, strong area of what? A big, strong area of support, and there must be demand resting back into it. So all we do at this point here is classify or mark off an area where there's actually demand at, all right? And one, we got to see, make sure that, I like to look at untested areas of demand. So at this point here, once price made this high here, okay, and broke these areas here, broke structure, broke the resistance, it has not pulled back. I'm going to mark an area of demand now. Simply, I'm going to take this, and we're going to mark off this little area right here, okay? All right, so price hasn't tested this area here of demand yet, okay? Price pulls back to it, all right? Once I get a break of candle, that's the next thing we have to see. Break of a candle once it pulls back to the area of demand. Break of this red candle to the upside, that green candle closes to the upside. I take it back up here. This is the liquidity resting right here at the tops, okay? Right here at the tops. Price goes back up here, so you get in here at 90, and you can get out at 94 and a half, whatever the case is, and pick up some points there, all right? Some ticks there. All right, so not the biggest move or, as far as like when price comes back to this area of demand, but still you can capitalize that and make money off of this pull back to this area here, okay? Now, let's take a look and see if there was other areas in the market where you can, capitalize on trading supply and demand. Now, okay, but before we talk about that, the question at hand will be this here. Okay, so let's use this as an example right here where I showed you the first area of demand. Price pushes up here, pulls back, breaks that area of structure to the left-hand side of the chart here, which was this area of resistance right here, okay? And it breaks structure, meaning that it breaks, excuse me, not break, breaks resistance, as it also broke structure. It broke through this area of resistance, which was the, most recent high. When it pulled back right here, the high was right here, broke up, broke resistance, broke through that area of structure to the left-hand side of the chart. Now price pulls back to this area of demand for the first untested time, okay? And we look to go long back up to the tops here, right? Right. Okay. Now, what if price continued breaking higher like it did here and then came back and tested this area here again and rejected? Could you go long? Yes, you could go long. Even though price would have tested this area once, okay? Tested it once. Always, I say be mindful once price comes back to a area that's been tested, a zone that's been tested, because things can be done there. The banks, institutions could be done filling orders at that level and just continue at that point to move through that area and break through that zone or break through that area of structure right there. In this case, they did. Okay, they came back to the area when they decided to turn the market back around, or when the market shifted, pushed the market lower. What happens? The market broke through that area where there was demand resting at. They were done filling orders, okay? And they kept pushing the market, driving the market lower, all right? But sometimes you will get a pullback. Say, for instance, price tested, pushes higher. If price comes back to that area. Now, this is what I like to see, though. What I like to see that is if price tests or an area, say demand zone, that has not been tested yet, and it comes to it, we know 9 times out of 10 that price is going to fail and reject there. Because why? A lot of buying came out of that area. It broke it through an area of structure, and it broke through an area of resistance. More likely, price is going to reject that area and then push up. Okay, but what I want to see, if I'm looking for maybe a second test to take place, but you got to wait for the rejection though when price gets back to the area. But what I want to see, once price tests this area, is it going to break this high right here? Okay, now it does. It goes up there and makes a new high. But the thing about it is this right here. If price was to not do that and just make a lower high here, then my probability, because at this point here, it goes from looking at things from a high probability to a low probability. So let's classify that and talk about that as well. I know I'm kind of like, I'm trying to stay focused here, but the thing about it is here, an untested area of demand or supply will be a high probability. There will be a higher probability of looking for something to happen at that area or in that zone versus one that has actually already been tested, okay? So if you get a second test at an area of demand or supply, that's low probability, okay? Why? Because the market has already come back there. It's already tested it. Orders could be done filling there, and then, it comes back to it for the second time, and if orders are done, they're going to push the market right through that area, okay? So, and then what I'm looking for also, if a second test does unfold, say for instance right here, it's untested it once, untested here, pushes up, I want to see price make a new high, okay, off of the untested area. Because then the probability of when it comes back to that area again, if there are orders left to be filled, and it's made a new high right here, more than likely if I get a rejection here, then price is probably going to push back up again. Even though we made a new high here, the thing about when price came here and just broke through it and did not reject this area of demand again, that told me orders are done being filled and that the market is just trying to push lower. And hopefully that answers questions when it comes to like low probability and high probability. Yes, price can test a supply or demand zone area more than once, okay? Is it still considered a demand or supply zone if it's already been tested? Yes, it's just a matter is if it's still high probability or low probability. If it's already been tested, it retraces or pulls back to that same zone again, then it's going to be considered low probability. And that's what we're looking for, is the high probability setups versus low probability, okay? High probability, think about it like this, untested, okay? Low probability, it's already been tested. It may touch that zone again, but you have to wait for the rejection to take it for the second time, okay? All right. So here's a zone as well. I'm going to show you another supply zone that you can be mindful of if price gets back to it today. Will be this area right here. Okay? And I like to use the volume profile incorporated into my trading too. I always say trade the sell the highs, buy the lows, sell the highs, price gets back to an area of supply, say for instance, above a high volume area, the probability is higher and that it's been untested. So if price comes back to this area right here, we get the rejection, This is an untested area at the upper portion of the high volume area here. We get the rejection. You can look for an opportunity to go short, back to an area of liquidity, okay? So I have that zone marked there in case price comes back to it, because what happened as price is moving lower here, you know, making lower lows and lower highs. What did it do? It broke structure over here, okay? It pulled back, okay? There was support right here, took out support on the way to the downside, has not come back to this area of demand yet, which means it's not tested, okay? Which means it's going to be a high probability area to look for some means of rejection to possibly take a trade once price returns back to it, if it does today or at some point, okay? So the reason why supply and demand is so profitable is because it allows traders, retail traders, you know, to be honest with you, to be able to move like the institutions, trade like the institutions. And if you can put yourself in that mind frame and see the bigger picture of what's going on the charts, all you want to do is position yourself when you're looking to trade in those zones, okay? Because you will be trading and moving with the bigger banks, with the institutions, okay? So when the market drives down from an area and is breaking through structure, look and mark that area of supply. The market is pushing higher, breaking through structure. Look to mark that area of demand, okay? Put your money where the players at hand, the institutions, the bank are trading from, all right? When they move away from that area, okay, and break through an area of structure, you know, like right here, say for instance, they pushed down, pulled back, the market broke lower, a lot of selling came out of here, a decent amount of selling came out of here, they broke structure here, so orders were filled here. But what's going to happen is that because this hasn't been tested yet, there's still orders waiting to be filled here. So the market gets back up there, more than likely, price will reject this area, and then you can get in and trade with the banks again to push them to move down, you know, to take your sell order, all right? And then the same thing like right back up here. Price gets back up to this high right here. This is supply sitting up here, all right? All this major selling off to the downside, okay? So the orders probably started filling here, you know, sell orders here. And I'm sure there's probably lots of orders sitting back up in here that haven't been filled yet. So when they get back here, again, banks will start filling more orders. You know, as long as we see the rejection, that's what rejection is it lets you know if the market's going to stop and pause and fail at a certain point, and then you can say to yourself, okay, the institutions are doing something here. What are they doing? They're trying to fill more orders, okay, to drive the market back lower. So then you just mark the areas of supply and demand and kind of see what's going on. Especially, like I said, if that area has been untested and price moves away from it real quick, more than likely, all those orders, or there's a lot of orders still sitting there or resting there that have not been filled yet, price will come back to those zones, those untested zones, reject those areas and fill them again, and then that's when you put your money on the line and be in the move. It's like a game of chess, playing with the players to be, you know, with them, not against them, okay? You don't want to be in competition with them. You want to think like them. You want to trade like them, and that's how you make money in this business. Guys, I hope that makes sense to you, everyone out there. I hope you found value in this information or the content that I relayed in this video here today. If so, please drop a like on the video. All you have to do is hit that thumbs up button. Make sure you subscribe to the channel if you have not done so by simply clicking on the subscription or subscribe button, that red button here on YouTube, on the channel here. Make sure to hit the bell because you will not receive the uploads to this channel here each time I post unless you hit that bell and have all your post notifications turned on. If you're interested in joining the Discord as well, we have a great community field here on Discord, roughly about 300 members now, to where we talk about the markets each and every day in the current sessions. You know, some people share their strategies. We talk about our levels of interest. It's a question and answering forum. So if you have questions about certain things, it's a great community filled with future traders. So if you're a future trader, please join us. All you have to do is find the link down in the description portion of the video. Click it, invite yourself in free of charge. And outside of that, the only thing I can say is if you're interested in joining one of the paid subscription tiers, they're basically the price of a cup of coffee. There's two of them, the loyal channel supporter and the elite channel membership. With the elite channel membership, you get everything in addition to everything in the first tier, in addition to the exclusive video content, which I do not post public. And basically what that is for $6.99 a month, for the price of a cup of coffee, you know, I'm sure you guys probably spend more than $7 a month on the price of a cup of coffee, but for $7 a month, You get you get exclusive video content, which basically shows, and I go through my trade breakdown. So I do live, I do my live recorded sessions pretty much Monday through Friday, and I post them to the channel. But I don't go into detail because I don't really have the time in the videos to be able to do so, because I'm trying to trade as well. But I go back and I recap in the trade breakdowns for those who join the Elite Channel membership, to where I discuss and go into depth about each one of my trades, so you know why I took those trades, where I took the trades, you know, kind of getting the inside thought, you know, you kind of walk with me and through my mind, through my eyes, the thought process of which goes on while I took those trades. So I break it down for you so you can get a better understanding of what happened and why I took those trades. So if you're interested in joining one of the tiers, simply click on the join button either on the homepage or on any video or on the any video page. Okay, any video here on the channel. Join button, click on it. You can join one of the two tiers. Like I said, the Elite Channel membership for $6.99 a month. You get all the exclusive content of my trade breakdowns as well. Outside of that, that's all I have to say, guys. I'm getting ready to jump over and start doing my live my live recorded session now, and start getting to the Discord community with the fellow traders and start conversing with them. And I'll see you guys in the next video. Take care and have a great and be safe if you're trading today.